All right, so let's dive right in today and look at the euro.
Okay.
Seems to be having a little bit of a tough time against the dollar lately.
Yeah.
The euro about to totally tank.
Well, let's see.
What do you think?
We'll break down the recent trends and all the expert opinions
Right.
and give you an idea of what to watch for as we head into the new year.
Exactly.
So to set the scene,
Okay.
it's important to understand, why the euro is struggling.
Right.
We saw those comments from ECB President Christine Lagarde to the Financial Times,
Right.
and she seems to be pretty confident that inflation in the Eurozone is under control.
Yeah, she even said they're close to hitting that 2% inflation target sustainably.
Right.
But that's where things get interesting, because the Federal Reserve over in the U.S. sending a totally different message.
Yeah, completely different.
Hinting at fewer interest rate cuts in 2025
Mm-hmm.
because the U.S. economy seems to be rebounding.
Yeah.
So is it possible that we're looking at two economies going in totally opposite directions?
It certainly seems that way.
Yeah.
And that divergence in their outlooks,
Right.
that's a major factor influencing the exchange rate right now.
Now, everybody's talking about this 1.0344 support level.
Right.
What's so important about that number?
Well, you probably already know
Yeah.
that support levels can sometimes signal a potential turning point in the market.
Mm-hmm.
This level is particularly important right now
Okay.
because of where it falls on the chart in relation to, recent price action.
Okay.
And if the euro breaks below 1.0344, it could really gain momentum to the downside,
Oh,
especially with the holidays coming up.
because thinner trading volumes around the holidays
Exactly.
can exaggerate those moves.
Exactly. That's it.
So opportunity for some and maybe a little bit of anxiety for others.
Yeah, exactly.
Now every deep dive needs to hear from some experts.
Of course.
Derek Halpenny from MUFG Bank.
Okay.
He's predicting the euro will weaken even further early next year,
Mm-hmm.
possibly even reaching parity with the dollar.
Wow.
Pretty bold statement.
That is a bold statement.
But he does think it'll recover later in 2025.
Okay.
Interestingly, his prediction isn't just based on the economic picture right now.
Right.
He's factoring in potential political shifts within the Eurozone,
I see.
particularly in Germany.
Interesting.
So he's looking beyond just the pure economic data.
Yeah, he's taking a broader view.
Okay, that's interesting.
Yeah.
But on the other side of the coin, we've got Bob Savage from BNY Mellon.
Right.
He's putting his money on the U.S. dollar and predicting it will continue to be strong well into 2025.
Okay.
What's making him so optimistic?
Well, there are two main drivers.
Okay.
The first is he believes the upcoming U.S. election is going to create some uncertainty,
Oh, yeah.
and that will lead investors to want the perceived safety of the U.S. dollar.
Yeah, that classic flight to safety.
Exactly.
But is that really going to be enough to keep the dollar strong for that long?
Well, that's where his second driver comes in.
Okay.
The Fed's stance on interest rates.
Right.
Remember, they've signaled fewer cuts in 2025.
Yeah.
And Savage believes this will make the U.S. dollar even more attractive to
Wow.
foreign investors seeking higher returns.
Right. So two very different outlooks.
Yeah.
Halpenny is banking on political shifts and an eventual economic convergence, while Savage is all about U.S. economic strength and the allure of higher interest rates.
Right.
Makes you wonder, are there any other factors that could really disrupt these predictions?
Yeah, like hidden factors.
Yeah, something maybe that neither of them are considering.
That's the million-dollar question, isn't it?
Yeah, it is.
And, it leads us to that fascinating data point that came out last Friday.
You mean the U.S. core PCE inflation data for November?
Yes.
The one that came in below expectations
Yes.
and caused a temporary dip in the dollar.
Right. It was a small dip. But it did make people pause,
Yeah. Yeah.
suggest that inflation might be cooling faster than the Fed anticipated.
And if that continues, wouldn't that weaken Savage's argument that the Fed will keep interest rates higher for longer?
Potentially, yes.
Yeah.
It reminds us that these forecasts are based on a snapshot in time.
Right.
Things change quickly, and unexpected data can really shift the entire narrative.
This is why I love doing these deep dives.
Me too.
It's like solving a puzzle with new pieces emerging all the time.
Absolutely. Keeps things interesting.
Yeah, it does. Okay, so we've got these two very different outlooks.
Yeah.
Halpenny sees the euro weakening further, even reaching parity with the dollar
Right.
before a potential recovery later down the line. But Savage,
Yeah.
he's firmly in the dollar's corner, predicting continued strength well into 2025.
Yeah, it's interesting, isn't it?
Yeah.
Because they're basing their predictions on very different factors.
It is.
Halpenny's really emphasizing this political uncertainty within the Eurozone. He thinks it's creating a level of risk that's being priced into the euro.
Right.
And he points to recent elections in Germany and Italy as evidence of this kind of growing instability.
And wouldn't that instability
Yeah.
make the euro less attractive to investors?
Exactly.
Especially compared to the stability of the U.S.
Yeah, that's his argument.
Okay.
He thinks that it's just going to make investors kind of shy away a little bit.
Okay, so that's an interesting perspective.
Yeah.
What about Savage's take on the dollar? He's pretty bullish, isn't he?
He is, yeah, and he's not alone.
Yeah.
A lot of analysts see the U.S. as this safe haven.
Right.
In a world that seems increasingly unpredictable.
Yeah.
His argument is that this perception of stability in the U.S., combined with higher interest rates, is going to keep drawing in foreign investment, boosting the dollar.
But couldn't that backfire, though?
Potentially.
What if all this investment creates some kind of bubble in the U.S. market?
Yeah, that's always a risk.
And then eventually weakens the dollar.
It is a risk, and it's something Savage acknowledges.
Okay.
But he thinks the Fed is aware of this and will take steps to manage it.
Okay.
He points to those statements about being data dependent. They'll adjust their policies based on, the evolving economic landscape.
So a lot of faith in the Fed's ability to kind of steer the ship.
Yeah, there is quite a bit of faith in them at the moment.
Okay, so let's go back to that inflation data we were talking about earlier.
Okay.
That PCE inflation data.
Right.
If inflation is cooling faster than expected, like that data suggested,
yeah,
wouldn't that kind of mess with Savage's prediction?
It could.
Yeah.
If the Fed sees that inflation is under control,
right,
they might be more likely to cut rates sooner.
Right.
And that would make the dollar less attractive.
Yeah, less attractive to foreign investors.
Exactly.
And then that would create a window for the euro to regain some ground.
Right.
Especially if Halpenny's right about the Eurozone getting its act together politically.
Exactly. And that just highlights how interconnected everything is. You've got politics, economics, these data releases.
It's a lot.
All playing a role.
Yeah.
And that's what makes forecasting so tricky.
Speaking of tricky,
yeah,
there's one more thing we haven't talked about.
Right.
The black swan events.
Right.
That could just totally upend everything.
Yeah, those global events that nobody sees coming.
Yeah.
Things like geopolitical tensions, natural disasters, or, crazy election results.
Oh, yeah.
They could completely shift sentiment in the markets.
And those are impossible to predict.
Pretty much.
It makes it even tougher on investors and travelers.
It does.
Just trying to make sense of everything.
It really emphasizes the need for diversification and being flexible.
For sure.
Holding all your eggs in one basket with currency can be really risky.
Especially in today's world.
Especially today.
So we've covered a lot of ground here.
We have.
Expert opinions, economic indicators, even talked about those black swan events.
The wild cards.
Yeah. But let's bring it all home now.
Okay.
What does all this mean for you listening out there?
Well, let's start with travel.
Okay.
Probably on a lot of people's minds.
Yeah.
Dreaming of that European vacation in early 2025.
Right.
This forecast might make you want to rethink your budget a bit.
Because if the euro drops, like Halpenny says, your dollars are going to go a lot further.
Exactly.
Talking about big savings on, flights, hotels.
Even souvenirs.
Oh, yeah.
Could really make a difference.
But timing is everything.
It is.
If you're flexible with your travel dates, it might be worth waiting a little bit.
Yeah. See how things play out.
Right. But there's always a chance the euro could rebound sooner than we think.
That's true.
Oh.
It's a gamble.
It is a bit of a gamble.
Now, what about investments?
Okay.
Anyone out there holding euro-denominated assets?
Right.
This forecast might make you a little nervous.
Understandably.
Yeah.
But it's important not to panic.
Right.
The first step is, assess your whole portfolio.
And your risk tolerance.
How much exposure do you have to the euro?
Exactly. Are you okay with riding out some volatility?
Yeah.
Or do you need to, rebalance things?
Yeah, because if you're in it for the long haul,
right.
A short-term dip might not be a big deal.
Exactly.
But, if you're closer to retirement or
yeah.
you have specific financial goals, you might need to change your strategy.
You might have to.
And diversification is key.
Always.
Don't put all your eggs in one basket, right?
Never a good idea.
Okay, so we've talked travel, we've talked investments, but there's one more thing I think is super important for everyone listening.
What's that?
We keep saying stay informed.
Yeah.
But how do you actually do that?
That's a good question.
without it becoming completely overwhelming.
See, it's easy to get lost in all the information out there.
Right.
I think a little effort goes a long way.
Okay.
Start by finding some good sources you trust.
Okay.
There are great websites, blogs, even podcasts that give you updates and analysis on the currency markets.
And those economic calendars
Oh, yeah, those are really helpful.
can really help you stay ahead of things.
Exactly, by keeping an eye on these resources and just getting a basic understanding of how economic indicators affect currencies.
Right.
You can make better decisions.
So as we wrap up this deep dive,
Yeah.
I want to leave everyone with one final thought.
Okay.
We've talked a lot about data expert opinions,
Right.
but there's something else that often gets ignored.
What's that?
Market psychology.
Ah, the human factor.
Exactly.
Fear, greed, speculation,
Yeah.
emotions can really drive the markets in some crazy ways.
A sudden shift in sentiment, maybe from a news headline or something trending on social
It
media.
happens all the time.
Yeah, can create these self-fulfilling prophecies.
Right. And suddenly currencies are moving in ways that make no sense.
It's a reminder that these markets are complex,
They are.
influenced by so many different factors.
Yeah. Both rational and irrational.
Which I guess is what makes it so interesting.
It does.
It's a constant learning process.
Absolutely.
The more we understand these forces at play, the better we can handle the ups and downs.
Well said.
So stay curious, everyone.
Stay informed.
And don't forget the power of human psychology.
Yeah, it's a powerful force.
And on that note,
Yeah.
that's a wrap for this deep dive.
It is.
Until next time, happy exploring.